Hi everyone, today I'm gonna teach you how to use COT terminal with cotwrapper.com, and I will show you new feature of COT terminals weekly analysis page. So let's start with weekly analysis page, and after that we will go to detailed COT analysis. If you look at weekly analysis, we can see report date chooser, and we will analyze the latest week, 12th of May, and this page provides us the latest week and previous week's data for compare them and obtaining data about what non-commercials like hedge funds doing, banks, institutions, and commercials are doing. So let's see USD data and start the analysis. In current week, the non-commercials like hedge funds, banks, institutions increase their long positions on USD. 17,000 contracts and 18,900 contracts, so it increased like 1,900 around. So if you look at opposite pairs like AUD USD, Euro USD, and GBP USD, we can see they increased longs too. Last week 100,000, 143,000, yeah, and they increased their longs 7,000. So, and if you look at euro dollar, we can clearly see they increased their long 7,000 contracts. So if you look at both data, the previous week and current the week's data, we can see in the both like USD and opposite pairs, they increased their longs. So when you first start reading COT data, you will confuse sometimes because what they are doing, you are saying. Actually, they are doing a preparation for Euro USD longs and USD shorts for some amount of time. How can I say that? If you look at commercial side, we can see the same thing. They they are hedging, they are decreasing their longs on commercial side. Opposite with non-commercials because commercials are hedging generally and non-commercials are speculating. So what we told, what we said Euro USD is preparing for longs, so US dollar is preparing for shorts some amount of time, and after that I think a big rally for US dollar is coming. So let's go to detailed COT analysis page and analyze how can we say that. I will choose US futures, US ICE futures US, sorry, and I will click USD index. Now if you look at latest data like last 1 month, 4 weeks, you can clearly see they are accumulating shorts. How can I say that? Last 3 weeks, longs are increasing, but if you look at like 1, 2, 3, 4, 5, 6, 7, 8, 9, like almost 2 months, we are clearly see they have increased their long positions. You can clearly see. For now, it seems like they increased their longs, but there is a reason for this. For understanding COT data, you need to use charts for understanding supply and demand mechanics with non-commercials behavior on charts. So what I am saying, for example, why they increase their longs for this week on US dollar? It's because mitigating the previous institutional demand zone. This is the previous institutional demand zone, and they lower the price here, and after that they will increase their longs on euro dollar, like they will short dollar index, and we will see that on next week's on here. I will record a video on next week, and we will analyze again and again. All weeks I will publish a video about COT analysis, and you can use your own analysis with your COT report.com. You can use that. Many features are free, and many features are with a minimum price like $25. It's not too much. If you want to use legit COT data analysis, you can use that site. So let's look at chart. For example, in next week, when we see longs are increasing on euro dollar and shorts are increasing on the XY, we can clearly say that yeah, the hedge funds are buying euro and we can positioning with them. So how can we say that where to exit? So it's all about supply demand mechanics and like yearly positioning and like all-time positioning it's about. So how can we analyze all-time positioning? In the site, actually we can use two things: max and min contracts and 13 per average contracts. So how can we analyze this? For example, if we say if we look at non-commercials long in around 55,000 contracts, so we can clearly say I think it will be to all-time highs in charts, or it will be reverse. There is two meaning. Both mean like they are profit taking, or they will increase long massively and we will see new tops. In minimum, it's same. So if you look at contracts for now, it's like not minimum, not maximum. So for example, let's go to AUD/USD chart, AUD/USD data. If you look at Australian dollars data, we can clearly see they are in all-time highs. So what does that mean? What does it mean? Sorry for my English. I haven't talked English like last 1 year. Uh, because of that, uh, it's not good enough for speaking efficient. But with videos in practice, it will be better. As I said, I haven't talked English like since 1 to 2 years, maybe once in a year. So sorry for that, and let's continue the video. We can see they have maxed their positions, so we can clearly waiting a reversal on AUD/USD. So if you look at Australian dollar futures chart, I'm expecting like this move, and after 0.73 I will expecting shorts, but in this area is better shorting from this area. But if we give confirmation in this area above 73s, I will look for shorts and massive shorts. Why we are choosing that area? Because this is the weekly institutional supply, and when we combine both COT data, AODST is maxing their contracts, maxing their position size, and we can clearly see weekly institutional supply on weekly chart. So we can say that for little bit amount of time they will short dollar index, and the opposite pairs like euro dollars, AUD dollars, NZD dollars will go long for little bit amount of time. Not too little, but like if we predict like maybe 3 weeks, 4 weeks around, and after that I think massive shorts for coming for like AOD USD, Euro USD, and all the other stuff like opposite of dollar index. So this analyze is finished now. If you like it, you can like the video. You can, if you have questions, you can ask on comments. I will record a video every week. Thanks for watching. See you in next video.